who are present. I hope you are happy and safe. And today I am taking you to a new lesson. I hope you have done yesterday's lesson, read through yesterday's lesson. And if there is any doubt, please put it in the query. Today also it's continuation of what we have done yesterday. So those who did not attend the class might find it slightly difficult, but somehow or the other we will try to accommodate also those who did not attend to the class yesterday. First, I will take up one query which I misunderstood yesterday. That is Anaka's query. Anaka is asking me, ma'am, how do we estimate the marginal external cost? I read it as a marginal cost, so I think I answered only marginal cost. Actually, this is a good question because marginal external cost is the additional cost externality imposed by an additional unit of output. It is really very difficult to estimate. That is one of the limitations. Today we are going to learn about it more. One of the limitations of any study on environment is that. For example, environment or externality is that you cannot possibly have an accurate measure of what is the marginal external cost. But definitely there are some criteria or parameters by which, say, pollution can be measured. For example, particles per million, or like that, you can measure pollution. So how much impact it will have on environment is also somewhat measurable now. Anyway, this is one big problem when you are taxing. We are coming to that today. When we are taxing or when we are making any effort to combat the problem of externality, it is a rough estimate. So there is, just like we do in markets, what is your marginal cost? That is the difference between microeconomics and, this economics. For example, in microeconomics, you have the cost figures with you. You can put it in a computer, okay, easily find out what is the additional cost. But here, you're doing with something very abstract, okay. You're dealing with the entire, environment when you talk about externality. And so that is why it is slightly abstract. But definitely you need not exactly know the measure. For example, marginal external cost is 10. No, like that you cannot. I hope I have answered your question. Any query, please put, because as we have agreed yesterday, your queries will be answered maybe by 7 o'clock. Okay, because otherwise. Today's lesson is, I will not say tough, but you have to be very, very attentive. The reason is so much, this is actually a huge topic that we are studying. So only limited portion we have included in our studies. So as you study, you will feel many lags. But I will go slightly slower as somebody suggested yesterday. But the thing is, we need to finish again 1 unit per day. We will try to do maximum. I will repeat whatever whenever it's possible. Right. So yesterday we studied about market failure. You have understood what market failure is. You have also understood that markets fail because of 4 major reasons. There are many more reasons like factor immobility, all that is not included in your syllabus. Market power, externalities, public good, incomplete information. Along incomplete information, it is asymmetric information, and along with asymmetric information, the direct result of asymmetric information, adverse selection and moral hazard. Okay, these are the lessons that we studied yesterday. So when you read through this lesson, probably you might have felt that market failure is, markets collapse altogether. That is not the meaning of market failure. Yesterday I kept it to myself. Okay. So today I'll tell you market failure. The markets are supposed to work perfect, right? It is supposed to work perfect, do the business perfect, create no misallocation of resources. Okay. But please do not misunderstand. You have to keep in mind when markets fail, they do not totally collapse. Okay. They simply fail to create the socially optimal outcome. You know what is socially optimal outcome? That is all cost and benefits are taken into account. Socially optimal decisions are when you are fully informed. And so because of asymmetric information, you don't, market does not reach optimum, right? So market fails does not mean market collapse. It only means that markets fail to produce the socially optimal outcome. Yesterday we read that nobody internalizes the external cost and nobody can fully get informed whenever there is asymmetric information. Okay, people end up buying, going in for adverse selection. People end up buying substandard goods like insurance company, which is buying insurance, which is selling insurance for unhealthy people. There are many consequences. When such consequences come, we say market fails. End of this lesson, we will also talk about government failure. Okay, I think I can talk. Okay, end of this chapter only comes government failure. And so, market failure. You remember there's a market failure in the chapter fiscal functions. That is second page, right hand side, the last paragraph talks about Adam Smith, who found out that there are possible market failures in 3 cases. That is the first one is, come on, second one, all that you can read. The third one is the government has to establish and run institutions that may not be run by private people for want of profit. That is an intervention, isn't it? Government, first he says, government should keep law and order. Government should keep defense. These things cannot be, totally, you cannot say, Adam Smith believed in the power of markets. He said, let alone, laissez-faire, leave the market free. But even he felt that markets will fail in the case of defense, public goods, like that. Okay, so should markets, limit its activities, should governments limit its activities as to what Adam Smith said? Or should government go in for greater intervention? That is the question we are going to discuss in this class. That is, should government be looking at the market to see it functions properly? No. The reason for possible government intervention is poor market outcomes, suboptimal market outcomes, less than optimal market outcomes. That is, the social welfare is not fully attained. Definitely government has an infrastructure for rule of law. You have done your law of contract, enforcement of contract, the complete system of judiciary, and all kinds of institutions and establishments which is running law and order. Okay, but that is inevitable. That has to be kept by the government because it is a public good. It will not be provided. There is no market for law and order, right? You cannot leave law and order to ordinary people. It is very dangerous, isn't it? You cannot leave law and order or defense to private parties, right? And so we go to the intervention part. We'll go very fast to market power. Yesterday we were talking about market power. Market power is monopoly power of different degrees. And what's wrong with monopoly? Monopoly is like a big fish, okay? Big fish swallowing all small fishes, okay? So when this big fish is swallowing the small fishes, the small fishes won't be able to survive. So what to do now? That is, you have to somehow control this type of monopoly power. Okay, let's see what the government is doing. So I'm discussing the first point, market power. We need not much discuss this because you already know what is monopoly and how monopolies are doing adverse things in the market. So you remember, you have done a lesson on Monopolies and Restrictive Trade Practices Act. Every country has competition laws. Competition laws are, the law that is regulating the conduct of business or the organizational structure of business corporations, so that it will not promote it will promote fair competition. The way they behave, the conduct of organizations, and the way they are structured, like if it is a business combination, it's going to be a monopolistic power because many people combine together and they act together, they behave like a monopolist, then it is very dangerous for competition in the country. That is why you have heard about antitrust laws. Antitrust. Before we go to antitrust, you have to understand what is trust. You already know that. A trust is a business combination. That is, suppose there are three businesses which are competing, A, B, C. Instead of competing, cutthroat competition, they will stand together so that they become more or less a monopolist, and then they can exploit the consumers. They can charge high prices because nobody else is there to supply. Okay, so there are three big people, they combine together. Like for example, suppose all the tire manufacturers in India, all the cement manufacturers in India, they join hands. What will happen to the customers? They are put at a disadvantage. So this is basically formation of a trust. No government encourages this. This is illegal in all parts of the world. And so antitrust laws are against such combinations and behavior. And so, you heard about combinations. There will be some contracts. These contracts are not explicit contracts, they are tacit, secret contracts. They are collusion. Collusion is, a not so healthy relationship. In the sense, it is a secret relationship. They collude, they play together, they secretly, conspire, conspiracy to work together in the market to increase their market power. You have also heard about cartel. I said 4 words now. Contracts which may not be written or explicit. Business combinations like trust. In some countries, US, etc., it is known as trust. T-R-U-S-T. Trust, cartels, combinations, collusions. Okay, collusion. To collude is to play together. That is not fair play, okay, foul play, right? And so to prevent companies from indulging in such activities, there are definitely rules in different parts. You can read because it's not very difficult. You heard about predatory pricing practices. Who's a predator, chasing the other animal? Like that, sometimes you will find, prices being cut, and prices are offered so low that others cannot survive. I have a basic minimum cost of production. How will I survive if big shots reduce the price because they can afford? And so that is predatory pricing. So there are many anti-competitive practices, okay? And to promote competition, to prohibit actions that are likely to restrain competition. actions that are likely to restrain competition. We have the Competition Act of 2002 as modified from time and again 2007. Then in US it is antitrust. In UK it is again the Competition Act. Okay. But don't think that always the government will discourage, encourage competition. There are exceptions. It is given in your book. Sometimes the government encourages monopoly. When does it that the government encourages monopoly? Have you heard about? You heard about patents, product patents, process patents. Product patent is only you can produce it. You have exclusive right. Process patent is you have exclusive right to use this process because you found out, you invented, this is your innovation, okay? And so you are given exclusive right. And what is this? This is an incentive for research and innovation. If somebody finds a medicine for COVID, definitely they're going to get patent, isn't it? And so product patent or process patent, both they are going to get. And so this is to encourage innovations. Sometimes we have also heard about natural monopolies. That is a new concept for those who have not done economics. That is natural monopoly. Sometimes some firms naturally become monopolists. For example, the government also do not restrict these natural monopolies. Imagine in your place how many electricity companies are there. Suppose there are parallel electricity companies. Okay, two companies, company A and company B. They put up, parallel electric lines. It is such a waste, isn't it? One particular line would be sufficient. And for this guy, for this particular first person A, B is superfluous, B is excess, okay. For this person, the cost of an additional electricity connection will be minimal. And if this person is also doing it, it is double the cost and the consumers will not get sufficiently, electricity at lower prices. So for this person, every additional electric connection is only very, very minimal cost, right? And so economies of scale, it is the same thing with water supply. It is the same with, natural gas, cooking gas supply at home. It is the same with metro rail, isn't it? If you run two parallel rails, not necessary, right? And so in such cases, they are public utilities. Government encourages natural monopolies, but definitely government will also have restrictions on prices based on, what is a reasonable return for example, for electricity, for example, what should be the charges for electricity so that they have a reasonable return based on their cost. Different criteria are applied and government regulates the price of natural monopoly. Otherwise, what will happen? These natural monopolies will start exploiting the consumers. Okay. So market power is reduced by a lot of legislation, a lot of monitoring by the government. Okay. Then there are certain standards. For example, we have advertising standards. Okay. Keeping up certain standards. And always, you can always file a suit under competition law. All that is there. I think that's not very difficult. We go to a more difficult lesson now. You listen carefully because we have a little bit of diagrams and all that. Okay, we go to externalities. First reason is market power. Second one is externalities. As you know, externalities are third-party effects for which the party which is originating is not responsible to pay. Every single person is interested in his or her benefit, not interested in internalizing the externality. So we are now talking about government intervention. I'm introducing a new concept. Command solutions. Command economy. Command solutions. Okay. Command solutions are not market-based solutions. A command solution is like this. That is, you have a government on top, for example, and the government commands, okay? You will do this, you will not do this, okay? Sometimes the government is there, okay? Government should not be looking like this, isn't it? The government is there, okay? The entire government machinery is there, okay? Government will pass commands as to do this, don't do this, okay? They will prescribe standards of activities, that is command. Okay, there will be legislation. Lots of laws are passed and consumers and firms alter their behavior. Did you get the word? Consumers and firms alter their behavior. Suppose there is a law with regard to, cigarette smoking in public. Suppose it is punishable and there is a legislation. Today I heard that section 144 is implemented in our place. So this legislation is a command. And when the command, it's an order, not a legislation. When that order comes, it is a command of the government which we are supposed to obey. Okay, it directly forces us as people to alter our behavior. Wearing of mask, alter our behavior. So please note, any governmental intervention is altering the behavior of monopolies, altering the behavior of people and firms who create externalities. To tell you a few examples of such command solutions, for example, you can ban the sources of pollution. For example, a particular smelting activity creates a lot of, brick kilns, etc., produce a lot of negative externality in terms of pollution. Then totally ban that activity. Don't have this activity at all. Earlier years, in Goa, no more iron ore mining, because it's creating a lot of pollution, right? Then copper smelting, the big crisis that was going on in near Tuticorin, right? Then forcing firms to install air filters. Remember, that is cost for the firms, okay? Then government can set up, smokeless zones. Smokeless zones. Then you take your vehicle every now and then for a smoke test, isn't it? That is emission limits. Setting standards like BS6, BS5, BS4, etc. And if you break these rules, you are likely to pay fine also. So this is direct control. They prohibit certain specific activities, okay? Then laws can be passed that abatement mechanism should be there. Abatement is either finishing or destroying or reducing or getting rid altogether. Abatement mechanism, such mechanisms should be built in your factory. For example, if you are running a bakery, you can't send fumes to the neighbors. So that some, abatement mechanism by which, the fumes will go very high or the fumes will get subsumed or something. This is a legislation and you are supposed to obey. And anybody who wants to enter the bakery business, they have to do this. You know about the house construction rules. You have to have your own, say for example, waste management system. You have to have your own solar system. Okay, so like that, the new entrants into the housing, they will have to spend a lot of money and so entry will become difficult. Okay, it will become costly. Environmental standards, emission fee. For example, if you are emitting to the environment, you pay a fee. And the money will be used for, just like in Pondicherry leather tannery, the money there, a lot more trees will be planted with the money, right? Then there is also special bodies like Central Pollution Control Board, like that. There are certain corrective intervention. This is not given in your book. These are all legal. And, to corrective intervention, the government is watching what is happening. Because in banking, have you heard about PCA? That is the Prompt Corrective Action, PCA. That is banks, the financial sector regulator. Okay, there are norms, like I hope you have got to study it for intermediate. For example, we have norms like Basel norm. Okay, Basel 1, Basel 2, Basel 3 is there. Then we have capital adequacy ratio. I think you understand it better than me. We have capital adequacy ratio. Capital erosion should not be beyond a particular point. Then lots of rules are there. And if banks are acting risky, and if they slip below certain norms in capital ratios or in asset quality or in profitability, there is prompt corrective action. And this is also a regulation. It does not come in externality, but still I thought of sharing it with you. So these are the command solutions for externality. These are actually governmental regulations. Okay, direct method. So there are two methods. One can be termed as on the part of the government to solve negative externalities. We'll be talking more about negative externalities now, because that is more common, right? It's easily understood also. So we have all these direct methods like government giving direct orders, methods, corrective action, etc. Then we have also method known as market-based. You need an explanation for this. Market-based approaches. Market-based. We are now talking about market failure. Then what are you talking about market-based approaches? Have you heard that, the COVID patients being given the plasma of patients who got relief from COVID? Anti-rabies, vaccination or whatever, anti-rabies vaccinations are made from, rabies-ridden whatever animals or whatever it is. So here, what the government is trying to do is, they are not going for any direct action, because direct action is a lot of administrative cost. For example, you have a Central Pollution Control Board, you have a State Pollution Control Board, you have to be keeping monitoring. Okay, it's all a big procedure where, cost of intervention is always very high. Then, it's not very flexible also. For example, if there is a pollution control board, they will set certain standards, and it is very difficult to find out who is not obeying this standard. The administrative machinery is very difficult to operate and very costly. Then, why can't we apply the forces of the market, apply the same principle of market, okay, as an approach to solve the market failure? That is, you are using market itself. Market means it's another system altogether. You are using market-based approach or market itself. Okay, government is now using market as a tool. When I say government uses market as a tool, what is market actually? Demand and supply. Okay. When I say market, immediately what you have got to think about is demand and supply determining prices without any external intervention. The very same market can be used by government to solve the problem. So what will be the plan of market-based mechanisms? That is, affect the prices, okay, manipulate the prices, manipulate, that is using some mechanism, okay, you change the price system, okay, change the price of the manufacturer, the price of the product or the output that they are using. So it operates through price mechanism. And then, yesterday I said price is a signal. If market is working properly, price is a correct signal. If externalities are not taken into account, the market sends wrong signals and it produces overproduction. Right? So, prices will send signals. And so what can you do? You change the prices and create an incentive. What is an incentive? For people to change. Okay. Actually, why is that why is that you will calculate all taxes properly and you know what is the tax liability, everything you know. But basically, who is to be taxed? Why should there be taxation? All that is in the realm of economics. Okay, how much will be taxed? Okay, all that you will find out. But why taxation? Taxation will affect the prices and will definitely alter the behavior of people and organizations. And you apply taxes in such a way that it acts as an incentive. It is an incentive to do or not to do something. Okay, for example, if you tax cigarettes heavily, why are cigarettes taxed? Why are certain things heavily taxed? Why is that luxurious goods are heavily taxed? Why is that import of fully knocked down units of cars, that is the entire car together, or sports bikes, they are charged more taxes or tariffs than ordinary goods to alter the behavior of people. Okay, right, and so that is the purpose of taxation. So we can use taxes, say for example, and it will affect the demand and supply. When taxes are there, what it is directly affecting is prices. Prices will give the signal and it will have indirect effect on your profit. Okay, if prices rise, naturally it will reflect in fall in demand. Fall in demand means your profit will be less. So I will explain it once more. That is, these market-based policies are relying or depending on economic incentives. Economic incentives. Economic incentive is a profit incentive. Okay. Economic incentives. And what is the objective? Accomplish environmental goal. What is our environmental goal? That is reduce the pollution. I said it is easy to think about pollution as a negative externality. And so environment goal, that is clean air, environment goal, so much of pollution, reduce the pollution. We are relying on economic incentives. What is economic incentive? Your pocket will be less heavy. You may run into losses. Okay, your profit will be reduced. And so when that is, striking you, okay, you will automatically reduce. So the government need not always catch, this is something like a carrot policy. And, these direct are, stick, horses, there's a term using, carrot and stick policy, right? Carrot or stick policy, whatever it is. This is stick, always planning to punish. Always monitoring. It is like children when they don't study, parents have to stand with a cane. That is very difficult. But suppose some incentives are given, some type of incentive. Like they are told when they will become a chartered accountant if you study maths properly. Okay, students will study. So this is a carrot policy, okay? Okay. Now it's not very simple, right? Still, the cost will be less. Which is easier, beating a child and making him study, or making her study, or give an incentive and automatically make him study? It is like this, the market base. So the cost is less for economic incentives, because the moment I know my pocket will be affected, the money in my pocket will be affected, my profit, my balance sheet, my bottom lines will be affected, I will be I'll naturally change my behavior. So there are two ways in which this market-based policies work. It might sound a little bit strange, that is environmental taxes. Okay, environmental taxes, as the very word says, environmental taxes are for protecting the environment. That is your objective. Just like indirect taxes, income taxes are income, environmental taxes are for, connected with the environment. And cap and trade. Cap and trade. Okay? Cap and trade. I'll be explaining that. Okay? So, taxes. Okay? Taxes affect prices directly. You are all calculating taxes. You have done so much of theory of so much of taxes. Okay? Taxes affect prices directly. For example, if there is an excise duty, now GST, whatever, GST of 20% on cement. Okay, definitely the price of cement will go up, isn't it? So, like that, taxes affect price directly. Because the price of a good is, the cost of production plus taxes, right? Then, cap and trade is indirectly affecting the price. Okay, so this is the difference. This is directly affecting the price. Both these are market based. That is, they are playing on, the pricing. Okay, and so this is directly affecting, and this is indirectly affecting cap and trade. And taxation, I'll tell you that everything goes like a story. Like, when there is a tax, it increases the price. When price increases, okay, naturally, demand will be less, isn't it? That is how demand curve is going. Higher the price, low, the firm will have to reduce the supply. Otherwise, it will be excess supply. Okay, and discourage consumption because of higher prices. And remember, higher prices are due to taxes. And so, only those goods that have negative externalities, polluting. So, you specifically choose those products and industries which are producing pollution. Tax them. Okay? When they tax, their prices will go up. When the prices go up, consumption will be reduced, because some people cannot afford when prices go up. Or, there is elasticity of demand. Okay, right? That is, people respond to price changes. When consumption is less, production has to be reduced. Automatically you solve the problem. Okay, it has worked through price mechanism. Prices go up when taxes are up, reducing consumption, reducing supply, reducing the output or supply. And when output is reduced, naturally production has to be reduced. When production is reduced, negative externality is reduced. I hope you get it like a story. Okay. And here, what is a tax now? This tax is an incentive program. An incentive program. It is behind your brain. Okay. An incentive program. It creates incentives to structure or to model my activities in such a way that it is consistent with the desired goal. What is the desired goal? Desired goal is reducing the externality. So this tax has finally acted as an incentive to reduce. Okay. And remember, who is the one who is paying? That is the person who is very careless. Okay. Very careless, pays the highest tax. The polluting firm which is least polluting will pay. So it can be a proportionate tax in proportion if the tax can be on the pollution, not on the output. Please remember that's given like that in your book. Suppose it is on the output, what will happen? Everybody has to pay whether you are polluting or not polluting. But it is on pollution means, if you are polluting more, okay, it is Pigouvian taxes because it is known under the name of A.C. Pigou, an economist. The principle is let the polluter pay, make the polluter pay. Okay, let the polluter internalize the external cost. Internalize is you are giving an external cost, you bear it yourself. Okay, you internalize the cost in the of a productive activity. And so we have a pollution tax that can be explained easily with a diagram. Let us go to the effect of a pollution tax, right? A pollution tax. So please remember, this is negative externality, and in the next externality, when there is a negative externality, when there is a negative externality, this is the marginal private benefit. Externality will be reflected in cost. Okay, now marginal private benefit is the same as marginal social benefit. Why? Because there is no consumption externality. Marginal benefit. So benefit curve is the demand curve. Yesterday you remember we drew the marginal private cost. Okay, marginal private cost curve. Marginal private cost curve and marginal private benefit, which is, since there is no consumption externality, it is the same as marginal. It is given in your book. Marginal social benefit. Okay. And so, what is it that these people produce? They produce based on the market. The market will charge a price PM and the market will produce a quantity QM. Right? Yesterday we learned this is too much. Why is it too much? Because we are considering only okay. Now let us make, say for example, this is a marginal social cost. And what is this gap? That is the external cost. As Anaka asked, you cannot measure exactly, but still there is an external cost. And so what is the appropriate, not market based, okay? What is the right quantity of output? This is the socially optimal quantity. And this should be the price. Okay? This is the socially optimal quantity. And this is the price. And for each unit that you produce more than the optimal, the marginal social cost is higher than the marginal social benefit. Okay? The marginal social cost is higher than the... Now what is the government's action? Okay? Put a pollution tax. Okay? A pollution tax. What is the ideal output? This is the ideal output. So put a pollution tax. Okay? Now MPC plus taxes. You can open your book and see. Okay? Marginal private cost plus taxes. Because taxes always increase the price. Okay? Taxes always need to be given to the government and it will increase the prices. Okay? Now the cost is represented by his production cost plus the taxes that he pays because of externality that is being created. Okay? And what do you find? Now, come on. We find that automatically now you reach a point where MSC, marginal social benefit, okay, marginal private cost plus taxes is equal to marginal social benefit. And we have the socially achieved, the socially optimal level of output. We have obtained the socially optimal level of output. Once again, look at the diagram. We have a marginal social benefit curve, downward sloping. That is the same as marginal private benefit curve because there is no consumption externality. Then the next curve that we have is marginal private cost curve. Yesterday's diagram only, right? Then the market produces what is marked by the red. Okay, it produces too much of output. This much of excess output. Yesterday's diagram itself. This much of excess output. Then now we are learning governmental intervention. Okay, the governmental intervention is intervention with tax. So you charge a tax that is equal to the externality. Measurement is difficult, I agree. But learning theory, okay, we have to learn the theory as such. Then, of course, you can apply it practically also. That is, this externality equal to the externality, you make a fair tax. And the price rises. Okay, when the price rises, this is the demand curve or marginal private benefit curve. If price is this much will be the consumption. If price is this much, people will demand only this much and only that much will be produced. So prices have acted to reduce consumption, to reduce output, and now, okay, the difference between when market is producing, come on, the difference between marginal social cost and marginal social benefit. If market is producing this much, the marginal social cost is equal to A, okay, the marginal social benefit is equal to B, and here it is C. Always remember, this is lost social welfare, okay. This is lost social welfare. We call it debt weight loss, lost for the society, right? And so the debt weight loss gets eliminated and reach this point, it is fully eliminated. As you reduce the output, the dead weight cost becomes less and less, and finally it is eliminated. Now the rest of the diagrams we will be doing a little more faster, okay? I hope it is clear for you. That is pollution taxes. The second method is, okay, now placed on the externality itself, and remember in terms of accounts, I'll tell you, this internalizes the externality and it has made, it makes it an accounting cost. Okay, but as I said earlier to your doubt, it is very complex, it is very costly administrative procedure to find out what is, okay, it only establishes an incentive. But the most important point to remember is, if price is high, if people have an inelastic demand, what will happen? I can easily shift. The taxes can be shifted to the consumers. I don't have to bear it. My profit won't be reduced because consumers have inelastic demand. They will not respond to a price change. Okay, right. But, when you put too much of taxes also, there is another risk, People will move from one state to another. People in UP might move to Bihar because in Bihar, pollution taxes are less. Or they might go to Sri Lanka because pollution taxes in Sri Lanka are less. That big problem of capital flight is also there. Okay, you can go home and read. Now the next one is cap and trade. Cap and trade. It is tradable emission permit. You read from behind. It is a permit or an allowance which are for, okay, for emitting. Okay, you are permitted to emit. And these permits are tradable. There is a market for this trade. Okay, for this. So it is a permit which you can hold. Okay, and it is a tradable permit. It is a permit for polluting. Okay, the right to generate a given quantity of pollution. This comes from the theory. Say, for example, When there is production, pollution is inevitable. Pollution will definitely come because even if you're breathing, it is pollution, isn't it? Now, if you're not simply producing anything, then you cannot have an economy as such. Okay, and so this is a marketable license to emit limited quantities of pollutants. So you get a license to pollute. I think I'll draw this. Suppose there is a lake like this. Okay, there is a lake. And then there are industries here, 1, second industry, third, fourth industry is very big, fifth industry and sixth industry. And these are all throwing pollutants into the lake. Okay, and we decide, for example, the total amount of pollution that this lake can bear. Suppose that is equal to 600. Let's put a number, say for example 600, and that is the cap. Okay, the cap is 600, and that is cap and trade. Okay, this 600 will be, 600 permits are allowed. Okay, now this 600 permits can be bought by people. Say for example, since this guy is very big, 200 will be bought. This guy will buy 50. This guy will buy again 50. 300. This guy will buy 50. 350. This guy will bought 50. And this guy will, 150. Okay. Now the cap is split into allowances. Each company is told that you can pollute this much. You have permission to pollute. There are 3 options. Suppose this guy's name is A. Okay. As far as A is concerned, there are 3 options. Meet the target. Okay. He has got 50, I suppose. Meet the target and emit only that much. Okay. And then if he is emitting more, he has to install pollution abatement mechanisms. Second is, he can either pollute equal to 50 or he can pollute only for 25 permits and then sell 25 in the market. Okay, he can make money by selling. If he is polluting less than 50, say 25, he can sell 25 which the other people might buy. Or he can keep it in a bank. That is, he can store it because later he might pollute. In case he pollutes, he can use this pollution permit. Okay, sell or store. And what is the third thing that he can do? Make a pollution equal to 75 because he has pollution permit only 50. Make a pollution of 75, in which case he has to buy 25 permits from the other people. These are the 3 options. So if you meet the target, you don't buy and sell, fine, you will produce the same quantity of emission as what is permitted and you will be happily making profit as you have been making. Or sometimes pollution abatement means it will be less. Okay. Then those who are reducing it and making it below, when they sell these permits, imagine these permits are not 1 rupee or 2 rupee, okay. It will run to millions, okay. And so sell that. And what happens? Your profit increases, your reserves increase, isn't it? And if you are above the target, come on, okay, above the target, you lose a lot of money, your cost of production increases, and when your cost of production increase, what will happen? Your prices will increase, you are less competitive, your profits are less, okay. So it is always in your interest to keep the pollution minimum. cut your pollution faster and you can sell it to others or to bank. Okay, that is, this company is creating more pollution than 200, he has to buy from others. If he is only creating 150 permit worth pollution, he can sell it to others. So people have always an incentive to make profit. Okay, so high polluters will definitely try to reduce pollution or run into trouble. Which is better? Reduce pollution, because there will be cost escalation, right? This is how the tradable permits work. And please do not underestimate, because this is something that is practiced from 1980s in the US. Okay, and in India, you will ask me, are we okay? In Delhi, people in Delhi will know, there are many mechanisms they are applying because pollution is so high. Okay, and how during COVID time the pollution was less, all that. In India, the tiny particulate matter, that is a measure, tiny particulate matter that is in the atmosphere is 8 times the WHO standard. Imagine the type of pollution we are experiencing. And so from 2010 we have what was known as a clean energy cess. Now it is clean environment cess. Clean energy cess is now become clean environment cess. Maybe 4 years back when this book was written, okay, it became clean environment cess. And again, we have a PAT scheme, PAT, perform, achieve and trade. That is actually the cap and trade system. Okay, and last year in 2019, I hope BBC was making a giving a lot of publicity for that. In Surat, that is Gujarat Pollution Control Board, they started this cap and trade. For the first time in India, on a pilot basis, they started the cap and trade policy, because lots of textile industry, lots of paper industry, pulp industry, distillery, then sugar industries there, lots of tanneries are there, power plants, iron and steel. You know about Gujarat, it is a highly industrialized area, isn't it? So they have started in 2019. Okay, and so this is, of course there are oppositions to that, because it is only an incentive, and the same thing, if it is inelastic demand, definitely, people will, that is the extra cost of cap and trade, that is the extra amount of money you are spending to pollute, that will be transferred to people in the form of price. Because any extra, this 25 I am buying, this guy is buying, and he is producing something for which the demand curve is like this. Very inelastic demand curve, okay. So even if he is increasing the price substantially from P to P1, he is not going to lose customers, only very little. So it depends, suppose he is buying these 25, he will immediately shift it in the form of higher prices, knowing well that he has got an inelastic demand. So that is a problem here also. And so that is, now we have discussed, what are the things we have discussed? We have discussed about how to control monopoly power. Then we have discussed about, direct methods, command methods. Then we have discussed about indirect methods, that is 2 methods. That is market-based methods, which are cap and trade and Pigouvian pollution taxes. Okay, now we have been talking about negative externalities. Now we will talk about, it might be slightly, I hope you have understood it, because of course it is something abstract, but once you understand it, you're doing everything about taxes. Now you know about Pigouvian taxes. Now, without knowingly, you are forming opinions about things, how to protect the environment. How can you use the taxes for protect the environment? How can you frame? Maybe one of you will frame a policy like tap and trade. You will invent because it is behind your brain. Whenever you are there, studying economics, and it is not studying economics and passing an examination. It is definitely your caliber that is getting enhanced. Now it is 6:59. I hope you have sent the questions, and I need to give you a break. It is 7 o'clock. Okay, rest and relax. Okay, shall we make it 4 minutes? Fifth minute, will you come back? Okay, thank you for your patient listening. Okay, thank you, and take a break and come back at 5 past 7. In the meantime, I'll check your doubts. are very good questions have come. I'm very happy about the questions. Vijay is asking, okay, Vijay is saying good evening. And then Palak is asking, repeat the concept of moral hazard. Okay, adverse selection is because of hidden, information. Because of hidden information, your choice is not very favorable to you. Because you see a box of apples, I said example yesterday, you see a box of apples, by just looking at, you cannot decide the quality, and so what you do is, you cannot distinguish between good apple and bad apple, and you happen to choose a bad apple. That is adverse to you. Moral hazard is post-purchase. After the purchase, your behavior changes. Because if I know that the cost that I am incurring, that because of my behavior, for example, I am doing rash driving, or I have a good domestic policy for my house. When I go out, if I have no policy, I will check whether I have locked the house 5 times. Okay. And if I drive, I will be careful if I don't have any policy, because I have to bear the cost. But now that I have a good insurance, I know that I can transfer the cost to somebody else. And so I will be careless. I make the probability of an accident greater. Okay. And the probability of an insurance claim greater. So, can the insurance company monitor me? No, the insurance company cannot monitor me, because can the insurance company be monitoring every person who is driving? I know that the insurance company cannot monitor me, and so I tend to be careless, and I make the accident more possible and insurance claim more possible, isn't it? More probable, and that will create losses for the insurance firm. Okay, normally it should not happen, isn't it? Normally, I should be taking the normal care, but because of asymmetric information and because of moral hazard, because I know I drive carelessly, but the insurance company does not know who is carelessly driving, who is good driver, nothing. That is asymmetric information. So it is there very well explained in the additional notes, because I found this material, okay, not enough. Okay, please go and read it. Okay. Someone is asking me reduce speed. I am very sorry, Kristen. I would definitely like to go slow, but we are given targets, isn't it? 11 days, 11 units. But so I have to finish it today. But I will try. I think I'm not very fast as such. Okay. I think, Kristen, please excuse me. But I will definitely take your suggestions. I'll try. I think I'll try to repeat. When will ICI mock test? Definitely you have to check with ICI, but I understand after the classes you will get it. Okay. Monopoly in real world. Very good questions are coming. Monopoly in real world. Who is asking this? This is Ja. Okay. Asking monopoly in the real world. Railway is a monopoly, but railway is a public utility. Okay. Every monopoly is not bad. I was talking about natural monopoly, isn't it? Now, this is a public utility. It is kept by the government, isn't it? It's a department, government department. It is for the welfare of the people. If you leave it to public utilities, are utilities which are done by the government, monopolies of the government, the postal services, okay? Because they want to do good for us, isn't it? They want to take all people to all places at the cheapest possible price. That is why railways are not making much profit. Okay, they are not making much profit. It is for helping people with minimal money, make them travel. Cartel is definitely bad. Who is asking this? This is Priyanka. Cartel is definitely bad. It becomes a monopoly and it exploits. Janvi Agarwal, two company forming strategic alliances. If the intention is, it depends upon the intention. A strategic alliance can be for reducing the cost. A strategic alliance can be for, for increasing their market power. If it is for increasing their market power, it is not good. Depends upon what the objective is. Then, off-topic practical question, very good. Mostly, Indian Railways suffer losses. That is because the government is wanting to give this utility to all people at the lowest possible cost. Okay. In most of the cases, but still they make losses. Okay. By government control, these losses, yes, government is definitely supporting the railways because it has got a ministry. But why they are incurring losses? It may be due to inefficient management, but railways are not increasing prices proportionate to their cost. Because it is a public utility, it is meant for ordinary people, it is meant for all people, okay? Government is doing this railway business just to give us the facility. Then social development like Swachh Bharat. Yeah, it is, intervention, definitely an intervention because people should ideally know to be clean, isn't it? If market has not enabled people to keep the standards of cleanliness required for good health, definitely the government interferes. But this is not a negative interference, it's a positive. It's not a punishment like. Okay. Ma'am, supply and demand will not come under. Oh, very good question. Who is this? Come on. It is. Okay, Janvi itself. Okay. You are asking me to look at 249. Yes, Janvi, this is not drawn by me. Government intervention directly as a supplier and as a buyer. Yes, buyer of goods. Definitely, it intervenes the market as a buyer of goods, and indirectly taxes, subsidies to alter the cost, like what I have done now. Subsidies we are going to learn. Okay, it's correct. Regulation and influence. This demand and supply is market based. And market based means it is not directly by government. Okay, government is here. In between, government is using the market mechanism using the market forces of demand and supply, okay, by manipulating or changing the prices and trying to achieve the goal, okay. That is what the government is doing through this indirect, okay. If you have to buy pollution allowances, definitely your money goes out of your pocket. Your cost of production increases, price will increase, demand will decrease, your profit will decrease, sales will decrease, your profits will decrease. So indirectly through prices, the government is trying to achieve minimization of environmental damage. I hope it is clear. That is the meaning of indirect. Okay. Then, why is that? Yeah, good question. That is again Janvi. Why MPB is equal to MSB? Yesterday I said no. Whenever there is no externality, private benefit is equal to social benefit. Externality in consumption. For example, I said an example of CS studies. There is an externality in, there is, for example, when you are consuming something, for example, inoculation is a private consumption, but there is an externality, that is, there is an external benefit. Wearing of mask is a private consumption, of which, social benefit is higher than private benefit. Please read the extra note. I have given it very clearly. On what pollution tax is calculated? Good question. Pollution tax is calculated on the basis of pollution that you create. There are methods. Sensors are kept. Do you know in Western countries, for every emission, there are sensors. These sensors automatically remit data to the network, and according to that the pollution is calculated. In India we don't have much of that, such a system, but in developed countries, sensors are there, how much pollution you are creating. Okay, just like there are cameras, how many driving errors you are making, overspeeding you are making. Okay, MPC, yes, very good question again. MPC and MPC tax is always parallel. Yes, MPC, it can be parallel, it can be rising. If it is proportionate, it is parallel. As your good question actually, as your taxes increase with the amount of pollution, very proportionately, then it is parallel. If it is not proportionate, like for higher levels, progressive rates of taxes, then your taxation curve. I hope it is clear. Progressive rates of taxes, proportional will be parallel. This is a very good question. Anyway, I am so happy you are attending the class properly. Okay, if it is progressive, if you cross certain beyond slabs are there, then it will be rising. Okay, then if it is regressive, it is falling. Right. Pollution tax. Okay, next question. Janvi Agarwal. Okay, again, pollution tax is also type of tax, so it will be included in marginal private cost plus tax. Yes, pollution tax is included in marginal private cost, and then it becomes a marginal private. Then what is reflected in your price is marginal private cost plus tax. Yes, if the tax is equal to the pollution, then all the externality that you made will be internalized. But there is again a problem. Suppose you tax very heavily, capital flight. The business people will be very unhappy. There are lots of theories in economics like rent seeking and pressure groups. Do you know the industries are very, very powerful, isn't it? Right? Then they will not allow the government to tax proportionately or more because they are very powerful. They will threaten, we will take our business to some other place. So usually this is a very difficult case to bring it equal to the social cost. Then the entire externality will be internalized by the firm. So it depends. It depends on policies of the government. Okay. Delhi government offering free electricity is direct or market based method. That is Delhi. That is a redistributive function. You remember fiscal function, redistribution function. If it is to everyone, it is a public utility that is given to make everybody happy. Okay. But if it is only for the poorer people, it is a redistribution function. Okay. That is taking money from the rich people and spending on poor people. Okay. This is it. And Christian, again, I'm sorry, I have to go slightly faster because now lots of lessons remaining now. I hope it is clear. Now you can keep your book open, then it will become slightly faster. I can teach. Now let us go to positive externalities. So far we have been talking about negative externalities. Now we are going to talk about positive externality. Positive externality in production is there. Positive externality in consumption is there. Okay. Now what is positive externality? That is the marginal private benefit. That is my demand curve is less than the marginal social benefit. That is I may be benefiting, just to put it in numbers, say for example, if I measure my benefit just like Arthur Marshall said, okay, if I can measure my benefit and express it in terms of numbers, I measure it and express it, okay, from consuming education or immunization or being a chartered accountant and being in the society, okay. The marginal private benefit is this much, and without your knowing, the society benefits 10. This is the social benefit or the externality. Okay, this is the external positive externality. That is all. This is the positive externality that you have. Okay, you are spreading the positive externality. So you add, okay, the marginal, this is your marginal private benefit. This is the, come on, marginal, this is total of course, every additional marginal social benefit. So marginal social benefit is the additional benefit. 10 more people wearing mask. Total benefit is 500. So one person wearing an additional mask, it is equal to 50. What does the external gain? 10 rupees positive externality worth. You have to reduce, you need not consume 10 rupees worth medicine. That is a because you are wearing mask, isn't it? And so the total, what did I write? My God, it is MSB, marginal. Okay, benefit occurs when consumption. Please write it down in your book. We measure it in terms of, so far we have been talking about cost only. You remember, marginal social cost lying above. I'll make it once more clear. Marginal social cost lying above marginal private cost is when you create a negative externality. There are actually 20 to 25 diagrams which is included in this chapter, but we have taken only few diagrams with the production, consumption, very few diagrams, because that is only the scope of your study, right? So here I thought I will take a positive externality and then the positive externality in consumption, positive externality in production. If there is a positive externality in production, it is there in the notes, extra notes, I have written it clearly. If marginal private cost is higher than marginal social cost. So now tell me, if you are in my class, I would have asked, what if, you can look into your book and tell me, what if there is a consumption externality? You can look into page number 2.55, okay, that is, I will draw it on the board, that is, there is a positive consumption externality. Quickly we will go, right? This is my marginal private benefit. Please note that is missing in your question, in your this thing, okay? So that is your demand curve. Please write. That curve's name is missing. It is the demand curve. That is the marginal private benefit curve. Just put an arrow and write below. It is the marginal private benefit curve. And there is a second line parallel to this. Marginal social benefit. Marginal social benefit curve. What does it mean? Private benefit is less than social benefit. So I spread an externality as I consume. Okay, I spread an externality as I consume. Make it, during COVID time, you are wearing mask. Okay, then there is an externality. Government really wants people to wear masks. Okay, let's go with analysis now. So there is definitely a benefit of people or you're wearing or anybody wearing mask, so that the social benefit is higher than private benefit. And then let us draw the cost curve. This is marginal private cost curve. That is, you are a mask maker, and this is, you are innocent, you are not having any externality. And so what it will be, come on, if there is no externality, then marginal private cost is equal to marginal social cost. Now please remember, we are studying what? An externality in consumption, and this is to be encouraged. When I write marginal private cost is equal to marginal social cost, this particular mask making producers, they are not creating either positive externality in production or negative externality in production, because at your rate, at your level, this would be very difficult for PG economics and for research and all, in ResearchGate and all. If you go in analysis, the simultaneous occurrence of all these, it is studied together. But here, to make the analysis simple, we have to make an assumption that this mask making firms are not at all creating any externality. Are you with me? For example, we assume there is a positive consumption externality. Please note, when you deal with consumption, it is which curve that has to be changed? It is the benefit curve, because consumption gives benefit. And when you choose to study about production externality, it is cost. Okay, in production externality, you consider cost. In consumption externality, so suppose you are doing something, you are doing smoking cigarette, come on, then marginal social benefit curve. Consuming cigarette, marginal social benefit curve will be to the left, because by your smoking, not your smoking, by the person who is smoking, is creating noise. His consumption is causing negative externality, and so it will shift to the left. I hope it is clear. And what will the market decide? Okay, the market will decide, come on, now, marginal private cost is equal to marginal private benefit. Okay, so the market equilibrium is this, QM. In your book, it is Q. And Q is not social optimum. Please make a note of it. Q is not social optimum. The market has no incentive to produce more than Q. Okay. The market has no incentive. Okay. Market has no incentives to produce Q that is more than this. Actually, what is the social optimum? Because profit motive is what they want. So actually, if output is this much, I am drawing an extra diagram, but forget it. If output is this much, this is your private benefit for which you are willing to pay. What is the social benefit? Social benefit is this high. Okay, QMC is the social benefit. But your private benefit is QME. Understand? That is the positive externality. Okay. So if you leave this mask to the making and all decisions to the market, okay. What is best? Best is MSB, marginal social benefit, is equal to marginal social cost. Here, marginal social benefit and marginal social cost are not equal. There is a divergence between marginal social benefit and marginal social cost. Okay. And so, what you do is, come on, you increase output, and this is the deadweight loss. I am not marking it. This is the deadweight loss that you are, what is deadweight loss? Left to the, you can draw this diagram that will increase your knowledge. If you leave this mask business to private sector, totally leave it to the private sector. Those who want to make mask, let them make. Those who don't want to make mask, let them not make. Then we will experience a loss of social welfare or deadweight loss. What is deadweight loss? The difference between MSC and MSB. In the case of positive externalities, MSB will be higher than, and MSB will be higher. Here social benefit is higher, social cost is only this much. And you produce at the point where social benefit is equal to social cost. And so what is optimum? The best amount of mask in the society is Q star. See, these private people will not produce Q star because they have no incentive to produce that much. Okay, they will produce only where private cost is equal to private benefit. But social optimum is marginal social cost is equal to marginal. Yesterday we saw it, isn't it? Marginal social cost is equal to marginal social benefit. Now, now we are talking about government intervention, right? What can government do? Okay, government can give a subsidy. Subsidy, for example, suppose there is a positive externality of inoculation against influenza, inoculation against smallpox, right? Then people will not automatically go and take it. Then what will the government do? Give a subsidy, 50% concession. Then what will happen? Many people will go for it. Okay, so a subsidy can be given. Okay, same diagram can also be used as a consumer subsidy and a producer subsidy. But in your book, you don't find much of explanation for the diagrams because this is meant to be taught. And you know, the book will become very, very big if you are explaining everything, you know, sentence by sentence. Now is in my explanation. What is social optimum is Q star. What market will, okay. And this is, come on, this is the deficiency. Too little will be produced or underproduction will be the underproduction of mask. So what can the government do? The government knows that, you know, this much is the, you know, unfulfilled external benefit. Okay, unfulfilled external benefit. So what will now the government do? The government will give a subsidy. Okay, the government will give a subsidy that is written there, S is equal to E. This is the externality, it is positive, and so the government will give a subsidy. And when the subsidy is a market-based policy. Why is subsidy a market-based policy? A subsidy is a part of my cost of production met by the government. For example, if I want to produce a fertilizers and 1 kilogram of fertilizer is 150 rupees cost of production, and poor farmers are not going to buy for 150. So what will the government do? Okay, I'll give you 50 rupees, 100 rupees subsidy, right? Let's make our government more, more concerned about 100 rupees subsidy. So the subsidy will be given to the producer by the government, and so now 1 kilogram of fertilizer can be sold for 50 rupees. Get the point? So subsidy is part of cost of production, and what will happen to my MPC now? My MPC will come down. Okay, my private cost will come down. So equal to the subsidy, my private cost will come down. This is not given in your book because not to complicate the diagram. And the supply curve will shift to the right, and you now find the socially optimal. Supply curve will now shift to the right, and the socially optimal number of masks will be produced. Okay, little crowded it looks. Okay, the socially optimal, I'll tell you, this is the externality. Should I draw it or look into your book? Okay. Because I was doing too many diagrams together. Okay, what happens is, this is your marginal social benefit, this is your marginal private benefit. Market will produce this output, but this is optimal. And so what will the government do? The government will give a subsidy equal to the externality. So this is the same, isn't it? This is the same, a subsidy equal to the externality. And so this part of your cost is borne by the government. That means your cost naturally reduces, and your marginal private cost Now you have a new supply curve passing through this, because this much cost will be, supply curve represents cost, okay. This part of your cost will be borne by the government, and you have the new supply curve passing through this, and equality of, come on, marginal private benefit. More people now buy mask. Okay, this portion who are not buying mask will now buy mask, and we have a socially optimal level of output. Okay, socially, where MSC is equal to MSB, we have a socially optimal level of output. So through subsidy is also a market-based policy. How did government achieve? When subsidy was given, okay, a part of cost of production is met by the government, and through that price could be reduced. Remember, market-based policy is playing on prices, either increasing price with tax or reducing the price with subsidy. I hope you are with me. Okay, this is a market-based policy, and the government is sitting there and applying taxes and subsidies and behaving in such a manner that, come on, prices will change. When prices will change, demand will change. Demand changes means consumption will change. This mask is something that government wants people to consume, and so the government has achieved its strategy of making people consume mask at the socially optimal. Quantity of mask being produced is now socially optimal. How did the government achieve that? That is market-based policy. So this is a Pigouvian subsidy. Pigouvian tax, named after whom? Pigou. Okay. And so for economics people, all the implications of subsidy, everything you have to study. But here I think we are studying some other lesson. Okay. We are not studying the implication of subsidy, dead weight loss of subsidy, like that. Anyway, for us, what we are learning now is, whenever there is an externality which is negative, government will manipulate price with taxes. Whenever there is a positive externality for something and government wants you to consume more, then, come on, what will they do? They will give a subsidy and reduce the price. In both cases, government is trying to manipulate the price, manipulate the demand, manipulate the quantity in such a way that from socially non-optimal, we turn to socially optimal. So the government can simply sit there and do all these business and create incentive. Okay, economics, the basic principle of economics is that people react to incentives. For every government action, either there will be an incentive or a disincentive. And the behavior of people will change according to the disincentive or incentive. I hope it is clear. Now three types of activities are over now. Now we go to, now it is easy. The next topic is government intervention. Actually, there are 30 types of government intervention you can study, but we are only studying very few, right? Case of merit goods. What is a merit good? From the very name a merit good is one, come on, I'll go slow now. A merit good is one for which there is substantial positive externalities. Okay, if you consume that, there is positive externality. That means it is not only, I pay money, I benefit. For example, I study in a good college or a school. I pay the fees, I spend the money for my for my books, pen, pencil and all those things. I pay fees, I study, I do educate myself, I read many things, I study economics, right? After studying economics, you become better chartered accountant. Studied economics properly, right? And so what happens is, you are getting educated so that, your fragrance of education spreads around. Whoever people you meet, your educated people have a benefit, isn't it? You know things, you can help them, you know where to go and what to do. And so people feel comfortable having educated people around. So it's a positive externality. Healthcare, lots of positive externality, isn't it? Then welfare services, housing, okay, that is the Delhi electricity. Answer is this: housing, fire protection, waste management. Then suppose the government is keeping public libraries, free electricity, so that you can sit and study. Otherwise, poor people, how will they sit and study if they don't have electricity, right? These are all merit goods. Or there is a museum, Taj Mahal. Yes, all merit goods. Historical buildings kept beautiful. It's a merit good. Public parks, beautifully kept with lots of hedges and all, right? It is a merit good. And there is a mistake in your book. That is, it is a mistake. Please correct it in page number 2.56. Okay, merit goods diagram, market outcome for merit good. Come on, can you find out? I have told you now what is deadweight loss. What is deadweight loss? It is lost to the society. I'll explain with a very simple example. I was walking and I lost 500 rupee note. Okay, I lost a 500 rupee note. And one of the people who are walking on the street, they got the 500 rupee note. What I lost, it is gained by you. Gained by another person. There is no social waste. Clear? But what you lose, if someone is not getting, it is a social waste. Isn't it? It's not about 500 rupees, please don't understand like that. It is actually, lots of theories there. When price increases, what happens is, yeah, I can draw it and show you because you should not be deprived of that. If this is the quantity, determinate demand curve, if I am charging this price, this much quantity can be. And what is this square OPEQ? That is my expenses, okay. If price rises, come on, my expenses becomes OPE-Q-. Okay, and this is the revenue that the seller gets, okay. Okay, now earlier this was the revenue, now this is the revenue. I am increasing my, I am increasing my payment this much. So this much money is, this much demand has contracted. I hope I am communicating. And now this has become the revenue. Okay, earlier this was the revenue. But now this is the revenue because this number of people have stopped consuming. Okay, now this has become my revenue. Let us compare the earlier and what happened to this area, this dotted area. Here what I am giving, they are getting. But this dotted area, it is lost forever. Since these people who are in this part of the demand curve, they are now deprived of this good because the price has increased. And this much of, utility or whatever it is, the area under the demand curve is the utility. This much of utility is lost forever. Lost in thin air, okay, like vapor, it has lost. That is dead weight loss. It cannot be recovered. Okay, so when you study public finance, it is what is lost not recover it. Okay. And so what is the best policy? Avoid deadweight loss. Because deadweight loss is inefficiency. This is the inefficiency of a price rise. Okay. It has created inefficiency. And so I told you that in public finance it is the difference between marginal social cost and marginal social benefit. And so which area? Marginal social cost, difference between marginal social cost and marginal social benefit. Please remember, note it down, always deadweight loss triangle should point to optimum. Deadweight triangle should finally point to the optimum. Then you will not make a mistake. Okay, you don't have to study that. Deadweight loss should always point to C. To C, right? You should point to C. So please remove that B and put it below A where it touches the marginal. That perpendicular touches, Q perpendicular touches the marginal social cost curve. So it is the triangle below AC. Below AC. So ABC will be the deadweight loss. That is the deadweight loss for the society. Then what is the other thing? Come on, you should be knowing how to read it. Come on. It is, come on, if this guy is producing more than Q, come on, more than Q, what happens? For every unit over Q, please listen to me, for every unit more than Q, his marginal private cost is going higher and higher. Demand curve portion is AC, but his cost curve portion is AB. It is not deadweight loss, it is his private loss. Okay, so you remove that shaded area and put the shaded area AC on the left hand side. It will be B. Okay, I hope it is clear. Okay, then come on. This is the diagram. Now this is the diagram which shows, I'll draw it on the board. This is the diagram which shows. I hope deadweight loss is clear for you. Now you can use words like deadweight loss. Okay, it is always fashionable to talk in terms of economics, right? And so we have a merit good. Did you notice it? Okay, a merit good. A merit good has, this is a marginal private benefit. Please note, this marginal private benefit is equal to marginal social benefit. What is the meaning of marginal private benefit equal to marginal social benefit? That is, there is no consumption externality that is considered. Okay, it is not, we are not considering the consumption externality, that is production externality. If you produce a merit good like education, because government is concerned with production as well. Consumption is another diagram. Okay. That's what I said, 30 diagrams are there. Okay. So here, government is intervening into production of education, production of healthcare. For example, during COVID, this is more practical and applicable, right? So the marginal private cost is like this. Marginal private cost of producing education. But marginal social cost is less than marginal private cost. What is the reason? Because there is a positive externality for merit good. There is a positive externality. There is a positive production externality. That's what I asked you to write down. There is a positive production externality, and so marginal social cost, okay, is less than, okay. Leave it to the market. Okay, leave it to the market. Output is how much? Marginal. Private benefit is equal to marginal. Okay. Leave your school education to the market. Production of education, leave it to the market. Let CBSE schools be run, or all schools be run by private people. What are they going to equate? The marginal private benefit will be equated with marginal private cost. And how much will be produced? What is produced is, in your book it is Q. Okay? Q is the output that is produced. Is it good? No, it's not good, because this is marginal private benefit is equal to marginal social benefit, because we don't want to make it complex, diagram complex. Okay, and what is best for you? Best is marginal social cost is equal to marginal social benefit. This curve is also marginal social benefit, because we keep one constant always. And so what is socially optimal is Q star. What is socially optimal? Please note that on the y-axis it is cost benefit. Why is it cost benefit on the y-axis? Supply curve or cost curve is marginal private cost, marginal. What is benefit? Benefit curves are demand curves. And here it is quantity, how much quantity will be produced. Left to the market, there will be underproduction of merit goods. Okay, left to the market, there will be underproduction. Whenever there is underproduction, come on, can you tell me whether there is any dead weight loss? Yes. The difference between, it should point to the optimal. This is the optimal. It should point to the optimal. For every unit that is not produced, you know, the society has benefit greater than cost. Okay. So our same MC is equal to MR principle. Okay. That is marginal principle, marginalism. You move and produce up to the point where social optimum is obtained. This much you need not write. Okay. Then comes, the next one is, okay, why is that people are not using education? There are many problems. This is a very strong case of government intervention, because people do not know what is good for them. Some people are afraid of getting inoculation. Some people are, they do not know the value of education. They send their children for work rather than sending them for school, right? Then there are equity consideration. Is it okay that only rich people children, those who can afford to pay, only study? No. Then there is a lot of uncertainty also. Sometimes in the case of healthcare, we never thought that COVID will come, isn't it? Did somebody save money to meet COVID? No, we did not. Then such a calamity coming, you know, and you don't have money, because we never expected a calamity to come like this. Did you ever expect that the May examinations will be postponed? Unless there is a natural calamity, CA exam never gets postponed, isn't it? And so this is all, there's so much of uncertainty. And if you have no saved money, it means people will simply die. That is why government is now intervening in the market and creating and giving what is known as all types of medical care, health care, you know, in many states, you know, food packets, free kits, food kits are given. All these are government intervention activities. Can't you leave COVID to the market? Is there any problem leaving COVID to the market? My God, lakhs and lakhs of people will die. So government is intervening in the market with regulation, don't move about here and there, subsidizing the hospital sector, direct provision, and sometimes it is private as well as direct provision. Okay. We know insurance. Some more examples I am telling you. Compulsory insurance. Yes, why compulsory insurance? Left to the market, people do not know that they need insurance. That is why the insurance coverage in India is less. People do not know. That's why compulsory insurance. Insurance is good for us. So the government compels us. It's government intervention, isn't it? Then immunization of children. Don't people really know that their children have to be immunized? Leaving to the market 1,200 rupees for an immunization. Which child will get an immunized? Only rich people get. Rich people's children will get immunized. So government interferes. We know that our head is very valuable, but we never bother to wear helmet. Okay. So helmet wearing is compulsory. Why? Because government knows. People do not know. People don't care. Then seat belt. It's compulsory. Why? It is a merit good. Helmet is a merit good. Education is a merit good. That's why we have, children under 14 years compulsory education. Then when the government is providing a merit good, there is an economies of scale. When I say economies of scale, it means lots of advantages. Because we are doing it on a large scale, the cost will come down. It's a natural monopoly, I told you, for every electricity connection, for every additional water connection, the marginal cost is getting reduced, so that the price can be reduced. Okay. And so, government doing a massive health program, yes, cost will come down. Suppose it is replicated, 500 people doing the same activity with 500 levels of activity, then cost will go up. So when merit goods are directly provided, lots of examples are there, but I am taking only very few examples. When merit goods are directly produced free of cost, that is, you don't have to pay money at all, directly produced, okay, and given. Suppose this is the supply of merit good at any point of time. Supply of merit good. Why did the supply curve is a straight line parallel to the y-axis? Because at any point the supply of merit good is kept as constant. You can keep it as, there is nothing wrong if you can also keep like this, okay, and this is the demand. Nothing wrong. Just as an example, it is written like that. It is at any point of time, the total available merit good is constant. And this is the demand curve for education. That is the same as marginal private benefit. This is the demand curve for education. Okay. And if there is a price, let it be education or health care, if there is a price, come on, if this is the price, market price, this is the supply curve and this is the demand curve. And this is the price, this will be the quantity demanded. Okay, because the quantity demanded is equal to quantity of health care. Okay, free market price, OQ quantity will be demanded. If the price is still little higher, come on. There is no point of intersection. If demand rises, price will rise. That is not our concern now. We are thinking of government giving it free. Government giving it free. What does it mean? Something free means this is the price axis, isn't it? This is where price is mentioned. Okay. Price axis, when something is even free, it means it is given at zero price. If price is zero, come on, let us extend it and let the zero price line touch the demand curve. Okay, the quantity demanded, the quantity supplied is only this much. There are only this much of hospitals to cater to the needs, because you can't build hospitals. There are so many needs. You can't be building all hospitals all the time, okay? But this is the supply, but this is the demand. Okay, more people will demand, the quantity of healthcare demanded will be much more than the quantity of healthcare supplied. If it is given free, other things remaining the same. Consumption at zero price is substantial demand. So there will be a shortage. You know why this theory is written? We study Western economics. We study Western economics. So, what they are planning to say is healthcare should not be given free. It should be priced. If it is free, the demand will exceed the quantity that the government can supply. That is what happened in the US when COVID came. The public policy makers decide how much of healthcare should be provided. Should it be priced? Should it be free? Should it be left to the private sector? Okay, people wanted to come back to India during COVID. Why? Because our healthcare system is substantially provided or subsidized by the government. Clear. And so, when we study Western economics, right, these problems do arise. And I think we take a break now for another 4 minutes, okay? Because in the meantime, I will draw the diagram so that we don't. Okay, or I'll draw the diagram and you come back. So that I don't know whether we'll be able to finish. In the meantime, I'll check your questions. Take a break. 4 minutes, okay? Madam, queries? Madam, queries? I give them. Okay, then, okay. No problem. Demerit good is good. There is favorable social outcomes. There is a positive externality. Now we are going to next, that is demerit good. See, we are trying to frame government policies. Okay, right. You should have an explanation as to why you are doing this, why you are not doing that. Okay, right. This is market intervention. Now we are talking. Why market intervention? Because there is a market failure. Okay, market failure does not mean there is no market. Market failure means the market is either overproducing goods that are not good, underproducing goods that are actually favorable. So let's go to the opposite case, demerit good. So you know, demerit goods are socially undesirable. We call it economic bads. They are not good, economic bads. Okay, that is somehow or the other you find, you know, people indulge in producing and selling things that are not good for other people. Okay, example, drug, intoxicating drugs, alcohol, etc., etc., etc. There are hundreds of things, you know. For example, bombs that can kill people, right? Okay, terrorist activities, they produce terrorist activities. And left to the market, what will be produced is more than optimal. Overproduction. Overproduction. Left to the market, because profit motive is what is making them produce this. Left to the market, more than optimal will be produced. Whenever there is a negative externality, there is overproduction. Please note, whenever there is a positive externality, there is either production or consumption, there is underproduction. But you should not be confused. All goods with negative externalities are not essentially demerit goods. Okay? Because suppose a bakery is producing fumes. Okay? And a bakery is producing disgusting, a hotel is producing disgusting smell of, you know, chicken being fried. Or, for a vegetarian, meat being cooked. But can you say it is a demerit good? No. Steel is being produced, clothing is being produced, cloth is being produced. Okay, paper is being produced. If you have gone to a paper industry, you know, the entire area will be, you know, there will be smell of chlorine, which is used for, you know, giving, bleaching and giving proper color for the paper. But is it a demerit good? It is not. So please note, all goods with negative externalities are not demerit goods, but some goods which are demerit goods have great negative externalities. You ask an alcoholic, if you find one, alcoholics overvalue the alcohol. There is a true value of alcohol, but alcoholics overvalue a demerit good. They think it's good. Okay, haven't you heard people saying, oh, he is working hard, you know, some wife saying, oh, he is working hard, so, you know, when you take alcohol, you know, he will become energetic, he will be, you know, less tired and all that. So people overvalue demerit goods. More than that, you know, people have imperfect information about a demerit good. They do not know, okay, they are not fully informed. For example, a colored water which comes in bottle, I am not saying, I'm not saying the brand name, deep colored water full of color and chemicals which come as drinking juice, okay. People are imperfectly informed. It's actually a demerit good. But people have imperfect information because of advertisement. They think that they can drink it and become smart. Okay? Imperfect information. They do not know. Then next problem is, it's given in your book, people are not the best judges of welfare. I can't think that I know everything that is good for me. No, I do not know. I'm not the best judge of my welfare because there are some criteria. Okay. Then that is why the government should intervene. Take the case of intoxicating drugs. Government has completely banned it, isn't it? Then persuasive advertisements came for so many years. Negative advertising campaign. For example, alcoholism, liquor, smoking, etc. Okay. Have you seen the label of a cigarette? How dangerous, you get really scared seeing it. That is persuasion and using negative advertising. Then, legislation, in India you cannot advertise cigarettes, you cannot advertise alcohol. Okay. Trading, making or carrying intoxicating drug is, you are liable to be jailed. Right? Then cognizable offense, you cannot be even getting bail, isn't it? Then limit access to the good. That is, you're not supposed to sell alcohol and cigarettes, etc. to children or people below the age of 18 years. Then there are, lots of regulatory controls about demerit good, about carrying, making, trading and all that. Okay. For example, if crackers are made, there are hundreds of restrictions in factories where crackers are made. Okay. Then spatial, the word spatial, that's given in your book, that's why. Space. Okay, spatial. That is, you will not use this here. You will not smoke in this area. There is specifically, demarcated area for smoking. Right? Spatial restriction. Will not smoke in public place, like that. Then imposing very high taxes on cigarette. That's why cigarettes are so costly, isn't it? Then price setting. That is the next diagram we are going to draw. That is price setting. The government will decide, because these goods are demerit goods. We keep the prices. You set the prices high so that consumption will be less. For example, alcohol prices are very high because alcohol taxes, I am told that it is the State Beverages Corporation sells alcohol at 300% above its cost. And it is a very, very important source of revenue as well. And so price setting, what is the argument? The argument is it has inelastic demand, but still to reduce the consumption of alcohol every time, the government will put more taxes on alcohol. And also minimum price for a demerit good is a price intervention. Okay, price intervention. It is given that, okay, there are various limitations for this any policy, because in the case of alcoholic goods, there is demand is very inelastic. Marginal private benefit in the case of a demerit good. Marginal social benefit curve lies below the marginal private benefit curve because there are negative externalities. Okay, social benefit is less. Then we have the marginal private cost, which is equal to marginal social cost. Only one externality we consider at a time. Okay, marginal private cost is equal to marginal social cost. Right? So we can now, if you get this much curves, you can determine what is equilibrium. The market equilibrium is this. That is Q market QM. Can you see it? Okay, QM alcohol will be produced. Okay, QM alcohol will be produced and sold at price PM. Sold at price PM. And what is the socially optimal quantity? MSE is equal to MSB, right? This is the socially optimal quantity. So there is overproduction. We are producing too much of alcohol. How to make it socially optimal? Now it is not taxes, it is price control. Taxes of course is there. Price control, that is fixation of a price, okay? That is government wants to, government wants to keep a price which will ensure that production is optimum. And what price is that? Okay, this line Q optimum, this output, let it be raised up to this level where it reaches the where it you can draw. Once you extend this line and let that line touch the marginal private, easy to draw them, okay, marginal private benefit, and the government keeps the prices. Okay, this is the minimum price at which alcohol can be sold. Government fixes the price. Okay, it is much more than the market price. It is more than the market price, and nobody will sell alcohol less than this. And did government achieve? Yes. This is the demand. This is the point where the quantity, this will be the quantity demanded at this price, because this is the demand of alcohol. Okay, and so keeping the prices, by dictating the prices, the government has that optimal quantity of alcohol is produced. You will definitely ask a doubt, but before asking the doubt, let me tell you, you will ask the doubt, then if price of alcohol is higher, it is going to be adverse for families. The reason is, they will now cut the consumption of the family and set apart that money for buying alcohol, because alcohol is habit forming and alcohol is inelastic demand. Okay, because it's a habit forming commodity. That argument is actually correct. But still the government is trying to ensure the social optimum. Okay, in this case, there is a divergence. I am going to yesterday's lesson, that is, marginal private benefit is higher than marginal social benefit, because alcohol has a negative externality of consumption, okay, and the society's benefit is less when people. Big problem is this highly inelastic demand. And you can't expect, a normal demand curve like this, and because price is increasing, there will be a proportionate fall in demand. It's not going to happen. Then again, I'll tell you, this increased taxes or increased price, whenever it is taxed, it's not, we are going away from this, we are thinking of taxing alcohol. What will happen? The sellers will never bear the taxes. It will be immediately shifted to the buyers. Then suppose the government is going to ban it. Okay, in many states, the ban of it is happening. But what is happening is, there will be a hoosh. That is, there will be an underground black market where people drink whatever. I've heard that some people died because they consumed this hand sanitizer, because 70% content of a hand sanitizer is alcohol. So these are all big problematic issues for the government. So it is economists, sociologists, all social scientists together only should decide on taxation policy for such issues. In the case of public goods, there are 2 more pages, I think. I think we will go slightly slower. In the case of public goods, you already finished the theory. Government should directly provide. Where is the money for directly providing public good? Tax revenues. Okay. But we studied in the classification there are some excludable public goods. So for example, the government is maintaining a park. Definitely, if it can be excluded using entry fees, okay, you can charge an entry fees. Then, private firms can be issued licenses. Say for example, for providing a public good. And when licenses are given, you know, like they can charge an entry fee and provide a public good which is good. Okay, but whenever entry fees are allowed for public good from private parties, say for example, maintaining a good, reserve forest or a park with lots of wild animals, right? And you charge a fee for entering. Suppose the private party keeps the fee very high, you know, the entire purpose is failed. So there will be very strict control on the fees that will be charged, and also, you know, about the operation of this forest land, okay, where what type of animals are kept, okay. Right. And again, the last point is, I'll tell about government failure, okay. Some activities are done only by government. For example, drug patenting. Who will do it? Only government will provide. Then atomic energy, only government will do. Space research, only government will do. Then aerodrome security, only government will provide, because you can't entrust it with the ordinary people, because private self-interest is definitely going to be against the security of an aerodrome. Okay. Now, before I forget, let me talk about government failure. Government failure is the last lesson. Okay. But, okay. What is government failure? Come on. The market is doing and it is working. And the government feels that I should interfere. The government should interfere so that market welfare will be more. But you know, it makes matters worse. The market was doing, there are many issues like that. Market was doing it better. But now the government has come in, you know what it is, you know, it has become a lot of, you know, administrative inefficiency, then lots of delays, and people were enjoying that particular good or service. But now everything has become, it is like, you know, certain private transport services, you know, nationalization of routes. So private buses are running, and they are running, of course, but government feels, you know, they should nationalize that route. And then no transportation, the cost of operation, the road transport corporation is not at all running properly. Then that is government failure. So do not think, please understand, don't think that always government is a very good person, get very good people to intervene. No, sometimes the government intervenes with lots of cost. Okay, lots of cost. Let me check your questions. Okay. Yeah. Government is spending millions and millions, crores and crores of rupees. The cost of intervention is so high that what happens is, that is government failure. The cost of intervention is 10 million and the benefit is only 2 million. Isn't it government failure? Yes. Sometimes government enters and makes the matter complicated. Okay? And that is government failure. So we should not be thinking that government is always successful. No. Government intervention can be plus positive for many things. But government intervention can create high cost, loss of profit, loss of incentives, okay, wastage of government tax money that is collected. So that is government failure, because government does things with an administrative staff. And these people do not know the real story. They are not informed. And the next thing is, you know, there are many types of lobbying That is, some industrialists will want things to happen in their favor. They call it regulatory capture. Okay, you don't have to learn that much. So, government will have to favor some people because they are lobbying. Their money is needed for elections. And so, government interference creates unfavorable results. So, left to market, things would have been better, but government came and created a chaos and lost a lot of money, and that is government failure. So, this is government failure. I'll check the questions and then, okay. If A use 65 permit, 65 permit and rest of industry has used to maximum limit, then what will happen? And is there any incentive to use less permit given by government? Okay, I will answer. This is Danvi's question. Good question. For example, I presume that A has 50 permits. A cannot use 65 permits because A has got only 50 permits. If A has to use 65 permits, it has to buy 15 permits from someone. Okay. If 15 permits are not, that is the rest of the industry has used maximum limit. That is a very, very poor situation, very, very precarious situation, because that means cap and trade is not successful. That means pollution has exceeded the cap. Cap is on your head, which means the highest point. Okay. So, the government has failed in its policy of cap and trade because the cap is 600 and now 15 pollution. So, government will definitely have, this cap and trade has not worked. Okay. Then government will have its own policy of penalizing A or asking A to close down at least for some time. You know, there are many other methods by which A can be punished, or A can be heavily fined for using more than right. Okay, I hope it is clear. Effect of minimum support price. Minimum support price I haven't taken so far. I don't think I have time to teach that. I'll teach it in the next class. Okay, next class, definitely. Kristen, yes. Effect of minimum support price increase in both farmers and buyers viewpoint diagram, please. Yes. Minimum support price, we are coming to that. Next class only. One good can be merit good for one and demerit for other. Yes, merit good can be not generally, because the classification of merit good is that which has positive externality. Merit goods are generally in economic theory, merit goods are those that always generate positive externality. It's good for others. Because when will education become bad for somebody? When will healthcare become bad for somebody else? When will provision of certain services, okay, where child care services, okay, it's a merit good. Child care services, okay, when will it become bad for others? When will protection of women, it is a merit good, will it become bad for some women? Then it is government failure. Okay, right. So some merit goods need not become, one good can be merit for one. No, generally that is not a classification. Merit goods are having very definition. Yeah, in economics, please note, that is it, yes. When you say for example, define certain things, it is well within that definition that we stay. Maybe for one individual, say for example, if government has a policy of gender equality, some people's husbands may not like it. That is, you understand, but that is not that. The very definition of a merit good is that which offers positive externality. Okay, people do not know, the people who consume the merit good, okay, it is good for them and also good for the society. Okay, ma'am, but sometimes, yeah, this is from Anaka, yes. Ma'am, but sometimes the merit goods possess greatest threat to society. Just for example, highly educated youth is getting attracted towards terrorism. I will tell you the difference between education and literacy. Yes, education is different from literacy. I don't think educated people will ever go for terrorism. Because why do we get people educated? We get people educated because we want to convert, for example, their mean nature, I must say, okay, unfriendly nature, mean nature, their not so good nature into civilized people, isn't it? I don't think terrorists are civilized people. They are not civilized at all. They are not educated. They are only literate. They can read and write. They can read big things and write big things probably. They can read, how to conduct terrorism and all those things they know, but they are not educated. Okay? So it is not the fault of education, a merit good. It is the fault of the receiving end. It is not the problem with education. It is not because education is bad. It is because those who are terrorists have wrong notions and wrong conceptions about what is to be done and what is not to be done. They are not civilized people. Okay, they are literate. Just because they can read and write, don't call them educated. So there is a difference between education and literacy. Once education is there, as I said, you will spread the fragrance of education. Okay, you will keep spreading the fragrance of education. You will be useful to others. You will help people write, read, and so on, right? Okay, a state with 100% literacy, you can understand, because you are from Kerala, okay, you can understand the difference between Kerala and some other places, not all states, okay. Wherever literacy is high, definitely, wherever education is better, definitely it has got other social implications like infant mortality rate becomes less, okay, then your very birth rate becomes less. It is an entirely new, different field, the benefits of education. So, very good that you asked, because we should distinguish between education and literacy. And the terrorists, I think, had a negative education. The way they received education, they received a wrong education. You can't call it education. They received a wrong type of cultivation, we can say. Their cultivation has been very adverse, and the people who they cultivated them, they are very adverse to the society. That is why we have a court of justice. That is why we have punishments. That is why this is an antisocial activity, and no educated person will. No, you cannot blame education for that. Education is always having a positive benefit on the society, not only on the individual, but also on the society. So the total benefit of education is not the benefit that the individual gets, it is the entire society is benefiting. Okay. That is. I hope my question is answered. About minimum prices, I think we go in the next hour, or I will introduce, no problem. That is price intervention. Let's go and find out whether you. Yes, I think. Please don't be pushed by the. Very much into 2.49, because that is simply a diagram, a classification, which I also may not agree with. Okay. We talked about what are the controls we About if you go through the pages, you can see we spoke about many type of government intervention. Please note that government intervention, you can sit and study if you want, maybe 3 years. And we are limiting it to 18 or 20 pages means, that is, we are already taking a very, very narrow version of government intervention. Okay, and also at your level, economics is so vast and varied, and when it was introduced, this macroeconomics and public finance was introduced, just to give a brief idea about economics. That's all. But that will definitely polish your thinking and make you think more rationally and, take into account multiple aspects of things when you make a decision. As I said, when taxation is resorted to, we know how to calculate taxes, but what should be the criterion of taxation? What should be taxed and what should not be taxed? What is the effect of a tax like this and what is the effect of a tax on such and such goods? Because you are going to be policy makers, one need to know, okay, what is the effect and all. Someone was asking me, about minimum support price. I'll give a general opinion because I can take 5 more minutes is usually what institute has permitted me up to 8:45. This minimum support price is a highly controversial area. Okay, minimum support price is, suppose we want the agriculturists to be incentivized. Some type of assurance should be there. Like if I cultivate, suppose I need to sell my wheat for 5 rupees a kilogram, I would have borrowed money. I would have spent quite a lot of money on agriculture. Next time, I may not be encouraged to cultivate. So we have a cobweb theorem in economics. Cobweb, that is, cobweb. That is this spider's snake. This year's output depends on last year's price because it plays on incentives. Okay, if this year, or if this year the price of moong dal goes up, next year what happens is people will cultivate more moong dal. This year tomato is less, price is less. People are discouraged from cultivating tomato. So how can government solve this problem? Because it is the duty of the government to ensure constant supply of food to all its citizens. So we have to grow food. We have to incentivize people to grow food, and so we have to give an assurance, that is, if you produce, definitely you will get this much of price, you can be assured. If the market price 30 rupees per kilogram, say for example, if the market price falls below 30 rupees, say 25 rupees, you are assured of 30 rupees. Okay, you are assured of 30 rupees, and who will buy then? The government procurement. We have a Food Corporation of India which is procuring food and keeping in buffer stock to be released when need arises. Okay, and so a minimum support price is a result of market failure in agriculture, instability of food supply and food price, instability of farm income. If the market is very good, there should be no instability. Okay, and that is why this is a symptom of market failure in agriculture. Okay, if market is perfect, then there should be no, there should be no instability in farm incomes. So minimum support price is is a measure by which government ensures stable intervenes into the market. This is a huge area of study, price intervention in the market. Okay, price intervention. And the price is usually decided in the market But this is non-market pricing. Non-market pricing. Those who have studied socialism will understand. In socialism, it is not market forces of demand and supply that decide price. It is decided by an external, it is administered price. Okay, like that, this minimum support price is also an administered price, not determined in the market by the forces of demand and supply. Okay, it is decided by the government, an external authority, external to the market. Okay, why did this authority come over to decide the minimum support price? It is because market has failed in the case of it. It is not that market has disappeared. Market has failed to ensure optimum prices and optimum quantity. If optimum prices are not there, next year optimum quantity will not also come up. Okay, and so that is why, very good question. I like that question. Thank you so much for your attentive listening of the class. I find you are enjoying economics. I find you are interested in it. Okay, please read the extra notes and the PowerPoints that I have supplied. PowerPoints are there. That is for you to go through on the previous day of the examination. You can go through quickly through the PowerPoints. But I have sent some extra notes also which will clarify the concept. Okay, thank you so much and have a happy learning, right? And please, if possible, read today itself. And then you will be clear about it, because these are slightly difficult lessons for a non-economic stream person, okay? And tomorrow we will be learning fiscal policy. Thank you very much.